Inflation, raised interest rates, and longer lifespans are putting stress on those who hope to retire this year, according to a report out from Natixis. Joining us now to talk all things taxes and retirement, we've got Greg Kling, who is the associate professor at the University of Southern California's Leventhal School of Accounting. Greg joins us as part of our Retirement Ready segment brought to you by Fidelity Investments. Greg, great to have you here with us today. In terms of how people are preparing for retirement and trying to avoid some of the larger tax mistakes on that road, where should they start? What is the number one tip that you usually tell people?
Well, first of all, Brad, thanks for having me on this morning. Always happy to talk tax. Really, I think we could boil it down to what might sound a little bit obvious, and that's having organized and clear records. When I was in practice, one of the very frustrating things for myself and my clients was when they would bring in, we used to call it the shoebox. And the reason that it, just makes it so difficult is, I think you can see that then you really just don't know what items you should be putting on your tax return. So definitely having those organized and clear records is extremely important.
I'm laughing because I don't literally have a shoebox, but I can definitely picture what you're talking about, and I am not very organized. So this is a good tip for me to be taking to heart, Greg. Also, let's talk about when we're focusing on retirement here and tax mistakes that people make. How should we be thinking about the various retirement accounts and how they relate to taxes?
Yeah, great point, Julie. So first of all, I want to point out to everybody on today that there was a slight law change for retirees who are needing to take what we call required minimum distributions. And really, in a nutshell, the required minimum distribution means if you have, for example, an IRA, an individual retirement account, at a certain age, you must start taking at least minimum distributions. Well, for 2022, that age was 72 years old. So for the taxpayer attaining age 72 last year in 2022, who hasn't been taking distributions, they actually have to take their first one by April 1st of this year. So coming up in a few days. They'll also have to take another one by the end of December. They changed the law, Congress did, with Secure 2.0, which passed towards the end of last year. Now the age has been bumped up to 73 starting in 2023. So there's been some confusion around that, and IRS actually just recently notified taxpayers of that. One thing I also want to make sure is this rule does not apply to those folks who have a Roth IRA. Roth IRAs are not subject to the minimum distribution rules.
What about for people who have had to tap savings in their retirement accounts earlier or ahead of time? How can they best go about making sure that they're insulated and still have the right figure for retirement, number one, but also are reporting that correctly?
Yeah, great point. Well, what I would say is, of course, I'm going to say you should always have a good tax advisor helping you out here to sort through some of the details. But if folks have, let's say, tapped into their retirement accounts, a couple of things. If they've taken it before retirement age, which is 59 and a half years old, they might be subject to early distribution penalties, although there are some provisions in the law that allow folks to take it early. But let's say they're past 59 and a half and they're just taking their distributions. Again, I'm going back to having a good tax advisor, a good financial advisor, so that there's no surprises, so that here's what my tax bill is going to look like by April 15th, so that there's no surprises from a cash flow perspective.
Yeah, we definitely don't like surprises. Just very quickly, lastly here, how do you figure out how much your Social Security benefits are going to be taxed?
Well, that's a good question. There's actually two levels of taxation. It could be 50% or 85%. It also depends on what other income you have. So I think just to keep it really straightforward, again, I'm going to go back to have a good tax advisor, prepare your tax return using a tax preparation program, and I think you'll get the number. Now, if somebody says they want to look at it by hand, my recommendation is going to go to the IRS website and look at the worksheet that they have available.
Greg, thank you so much. Really helpful tips in here. Greg Kling, Associate Professor at USC's Leventhal School of Accounting. Thank you.
Thank you.